What I'm going to show you is by far the simplest way to make consistent returns trading US30. Of course, the amount of capital that you're trading has a big impact on the amount of money that you'll make. But if you're trading a 100K funded account or taking a challenge to get one, this is your best bet to pass and receive consistent payouts upwards of 5K, 10K, even $20,000 a month. The setups that I'm going to review are the last setups that I took to end the month of May. These were discussed in my private coaching community, and they were documented from the beginning, execution, and the management to the exit on a live funded account. You'll see those on your screen right now. Not gonna get greedy here. There it is, right around, and I'm gonna lock in a payout just like that. And I have another account that I got this running on, so great trade here. We are looking at this price action on US30. What I really want to bring to the forefront is time. So when we look at US100, US500, or US30, these are all based on stocks. And the real needle mover for indices is when the New York Stock Exchange opens at 9:30 a.m. Eastern. This is what we call equity open. So if you ever hear me talk about that throughout a video, that's what I'm referring to. So it's at 9:30 on US30 that I am looking for a very specific pattern. This does work for all indices, but I just like US30. That's just my personal preference. That's what I like to trade. That's where I see the majority of my results. Mainly what I want to do first, look at the structure. So you can see some of my annotations are already on the chart, and I'm just going to leave those there, and I'll add some new stuff as we watch price develop. But this is a higher time frame retracement. US30, if you pull up a chart, this is June 1st right now, if you're curious. US30 has been bearish, and we have seen some really good, clean price action. So here is our most recent swing right here. So we have our swing high and our swing low. That is a 4-hour daily trading range. And currently right now we're in a retracement. So I am bearish. It's just a matter of where it's going to break down. So I have a couple key areas. And again, we don't even really need to discuss that. We can really zone in on just what the market structure is and then look for this pattern right at 9:30. So a lot of these points of interest are simply swing points that we're grabbing highs or lows before making a move. So for example, we can see consolidation here, price pushed up and then slammed down. And then we can see this high up here with that red zone. That is how I marked up that point of interest. And then the same thing for this zone here. We can see price ran those highs and made a push to the downside, making a lower low. And you can see this is all taking place in the New York London overlap, which is represented by this darker color in the middle. So if you're wondering what those are, that's just an indicator for sessions that lets me know when New York starts, when the overlap is, when London starts and closes. And that is just a really easy way to organize price. So right now, what we know about price is it made this low last week. So I have that marked up. That is a primary target, and I have it labeled previous week low. And then we can see price making a pullback, and we came right into that first point of interest. And I'm essentially just looking for proof that price is ready to break down and start targeting previous week low and make a lower low. And that is when we get into the pattern. This pattern essentially is just consolidation and then looking for a whipsaw at 9:30, right when equity opens. Essentially, that's going to look something like this. It's going to be price just moving sideways and ranging. And then right at 9:30, I'm looking for price to spike up above this range and then aggressively push to the downside, making a new trading range after it makes a lower low, and that's confirmed. So this is what I'm looking for right here. I want to see price spike up above the highs before it pushes down if I'm in a bearish environment. If this is a bullish environment and everything we just talked about was inverted, I would want to see the consolidation and then price spike below before pushing up like that. With that being said, I am going to remove those and we're going to get into the price action. So if we look at this price action here, we can see price made a pretty strong push up and it kissed my first point of interest. Once it came into that area, we saw a slight retracement looking like a flat flag, just rebalancing this candle here. And it looked like it started to make a continuation move only until it got into London session, which is this green background. And we saw a quick reaction after running these little highs right here. And then it really didn't do a whole much. It came almost right back to the bottom of this move here. We came into the New York London overlap and still not too much happening. And this was primarily because of Memorial Day. This was on Monday. And let me just check the calendar. So that was Monday, May 29. So there was just low volume in the market and the stock exchange was just closed. So there really wasn't much movement. As we came into New York, we saw another strong push down. When we came into Asian session, it just started consolidating. Now it's absolutely dead. There's just zero volume. And now we're looking for things to start picking up into London session and get ready for the next New York London overlap. And then ultimately coming into equity at 9:30 a.m. Eastern. I'm going to press play here and we're just going to take a look at price action. I'm going to start breaking stuff down. So you can see I have a red line already marked up and we can see price here. Now we're in London and it came above this trading range here. So that's kind of what I was talking about where price moved sideways, it pushed up and now we're seeing a strong reaction to the downside. And this would really confirm that it's ready to break down when we see price show a strong push like this, breaking structure, making a trading range, a new trading range, a swing low here, a lower low. I'm going to press play here. Now we can see a very strong push. I'm going to take that back a little bit and I'm going to drop down a few time frames so we can start looking at this price action. So when I was looking at this pattern here, this was my first point of interest here. This last up candle that took this consolidation and made a strong impulsive move down. So that was my first point of interest here. And I was targeting old lows. That's primarily what we're targeting here. Short-term lows aligned with higher time frame, long-term lows. So we can see here, that would be a long-term target here. But short-term, we have this low here. I'm looking on average for a 1 to 5. That will change slightly depending on current profit and loss on a specific account, but that is primarily my lowest that I like to see when I mark something up, a 1 to 5 risk to reward. I'm going to drop down and I'm going to draw a vertical line here and we're going to plot 9:30 a.m. Eastern. So that's essentially when I'm looking for this pattern to be created. If we're making this low here from this point over to 9:30, I just want to see consolidation. I just want to see this range and move sideways just like this. And then at 9:30, we want to see this spike up. And if it spiked all the way up, I would have looked for entry on that 1 hour. Otherwise, I'm just focusing on my pattern and looking for that. I always like to have multiple points of interest that I'm looking at just so I'm not blinded and looking for just one thing. But this here is my primary. And if it came up to that other point of interest, that would have been in my secondary point of interest. But mainly I want to see consolidation and then the pattern created right at 9:30. I'm going to slow this down a little bit and we're going to press play here and we're going to watch how price develops. So now you can see we are in the New York London overlap represented by this darker color. And you can see we're just moving sideways. There's a lot of volume in the market right now because we have these two big sessions combined, but price isn't doing anything. It's just moving sideways and it's getting ready. I like to just plot the highs and the lows. So here is the low of London session and we can see we're making relative equal highs right here, just consolidating. So I'm going to press play here and we're going to watch price as we approach 9:30. So now we're just about 9:30. We haven't done much as of yet. I'm going to move this out of the way just so you can watch the price action and you can watch how fast this happens. So I'm going to press play and we're going to watch what happens. There's the spike. So we can see price spiked up above these highs and then just did a fast 180 and pushed to the downside. And once we see a lower low here, this is confirmed. So I'm going to press play here and we can see our lower low confirmed here before price starting to pull back. So the easiest thing that you can do to take advantage of these patterns is simply just throw your fibs on these trading ranges. For example, here's our swing high and here's our swing low. For me, the sweet spot is the 71 to the 886. If you wanted to keep things very simple and not even look at candles or imbalanced price action, you can just focus on the trading range. And I like to take the 71. That's the start of my kill zone. And then again, we're targeting lows, short-term and long-term lows. And again, I'm looking for that 1 to 5 risk to reward here. I'm going to move this out of the way. And I'm also also going to mark up this candle. This is the candle that I was looking for entry, and you can see it lined up right on the 71. But again, you don't even have to worry about the actual candles if you want to keep things super simple. You're primarily just looking for the consolidation, and equity, you want to see it spike up and then spike down if it's bearish. And if you're in a bullish environment and you're targeting highs, you would want to see it spike down first and then push up and make a higher high, and then you'd look for a retracement. The candle that I chose was the last up candle before the engulfing candle. So that is why I selected that candle. And again, you can see it lines up right with the 71. So if I didn't even mark that up and I just took the 71, I would have come to the exact same entry. After we have this lower low and we can see price retrace, once price gets up into this area, you're market executing your trade. Now, of course, depending on your availability, once you see this pattern, you could just put a sell limit on there, but I like to market execute just because I have the availability. I'm sitting in front of my computer and I'm able to actually watch this. So I have the availability to market execute and manually manage my trades. So I'm going to press play here and we're going to watch how this one turned out. There's the entry right there. And you can see just a really strong reaction. And we saw a nice push up here, nice 1 minute engulfing candle. And this is just really showing clear impulsive move, continuation, and running the primary target, which would be this low here. And it made a nice push. So it ended up pulling back a little bit and then coming down a little bit deeper, ended up setting us up for the next day. So I'm going to show you how this one played out a little bit. This one actually, I believe, even came back and then pushed down. If you missed the first entry, you would have got another opportunity right here. And we can see, there we go with the price. It's starting to push down there. So we can see price came up, tested that entry, pushed down, just about broke the low, but it came back up and tested it again, which is perfectly fine. We have our pattern and we have targets here. Once it came up and tested again, now that's when it really started to break down. Now we're in the fib extension levels. These are important because these are essentially profit taking levels. So you can see it had some really nice gains. This thing ended up doing some good numbers, but just for the example of this video, I'm just showing you the actual pattern. So it's primarily looking at the structure on the higher time frame, identifying the swing lows and any old lows in a bearish environment, and then looking for this consolidation leading up to 930. 930 pushes up, slams down, gives you the pattern. That is where we look for entry. And then we had the exact same scenario coming into the very next day. So let's pull that next pattern up. Here is the very next day. So we can see price came up on that setup identified yesterday and then made this push down. We have this lower low. Now we're into a London session. Let's watch how this sets up leading up to 9:30 a.m. Eastern again the very next day. So here is 9:30. I just like to plot these on. It's just something to keep you organized and knowing exactly what it is you want to look for and when. Let's drop this down. We're going to go to a 5 minute so we can watch the price actions. And before I do that, we can see that we made a new lower low. Price is just retracing. So we're still bearish here. Now we have this low right here. That's our primary. And then we have some of those deeper targets that I showed you earlier. So we have this low here and then our swing low, which is obviously our previous week low as well. So essentially all we're looking to have price do here is show us signs that it's consolidating. When we get to 9:30 a.m. Eastern, we're looking for our pattern and then throwing our fibs on it and getting our entry. Let's take it from right here. We saw price push up and give us this strong impulsive move. We saw a retracement very similar to what I showed you earlier, and it looked like it was going to continue and then kind of stalled out and ended up being a failed high, which is really good because we saw a break of structure here. And now we are in the New York London overlap. So you can see we're getting close to 9:30. This is where I had 2 points of interest. You probably saw it marked up on the snapshots, but this is my first point of interest, very similar to that previous example. And I'm just looking for either price to push up here and then slam down or just consolidate right here. The consolidation is obviously going to be my primary thing that I want to look for, but that's always having a backup and just being prepared for multiple things that can take place. So I'm going to press play here and I'm going to slow this down so we can watch price as it develops leading up to 9:30. We can see price right here. It's starting to stall out. It's not really doing a whole lot. We have some highs right here. And again, we're just looking for 9:30 price to spike up and then give us the pattern. Here is the low and price is essentially just moving sideways here, not really doing much, and we're getting close to the time that we're looking for this pattern. So I'm going to drop down, I'm going to move this out of the way, and let's watch what happens when equity hits. Okay, so now we're coming into equity right here. There we see price do the exact same thing. It pushes up, and then our engulfing candle and our lower low. Once we have that, that's when we look for entry and we're good to go. So this was the candle here, but let's just get that lower low established, and we know it's the lower low when price starts to pull back. So here's our flag back. You throw your fibs on it. Once it starts retracing, I can actually drop lower and we can show you it a little bit clearer here. So here is our flag pattern. There was a nice 1 minute candle right here as well. That is inside our kill zone. Here's our 71, but you could have easily just taken the 71. Remember, if we're keeping things super simple, just look at the 71 and then you put your targets. Here's the primary on this low here. I'll just get this one out of here and drag that down. And then you have your fib extension levels, and we have our old lows. Let me just zoom up and we'll mark some of those lows up. So we have this low here already marked up. Let's drop down and we can see right here, that's really good risk to reward. Even in the fib extension levels, there's roughly a 1 to 5. So again, that's usually my buffer. Just for the sake of this video, we're not really focusing on targets. We're primarily talking about the actual pattern and when it happens and how to execute these patterns. I'm going to go to the 1 minute just so we can really watch this price action. This is my favorite, when you can just see a strong engulfing candle, a strong impulsive move, it makes a lower low, and then it just makes a flag. A flag is essentially a good indication of price continuing down. And it's called a flag because it looks like a flag. It's a strong impulsive move that makes a higher high or a lower low, and then it's just consolidating in its pullback. This one is just inverted because we're in a bearish environment, but this would be the flag pattern right here. We look for this to retrace back up to our point of interest. My entry on this was this 3 minute candle right here, because this pattern was so clean. For me, it was just more about getting into this trade versus getting a super tight entry and getting a really big risk to reward, because all of the lows down here offered a really good risk to reward if this wanted to end up being a runner. So here is the pattern. Let's just watch as this breaks down. So there's entry for me, and then we saw a really strong impulsive move, and price just started to continue breaking down and started running for the lows. Now we can see price in the extension levels probably running right around 1 to 3 at this point, and let's see, so right around 1 to 4 at that point. Then it just continued down, making a nice push. This one would have easily done 1 to 5 plus for you, and you could have just been riding your stop loss or stop profit right above these highs until it broke structure, indicating a retracement. But this is just such a clean and predictable pattern that you can take advantage of. It's just simply, what is the market structure? Find if it's a bearish or bullish environment, and then if you're bearish, you're just looking for price to consolidate and run highs and make a lower low just like this. And in a bullish environment, it's just inverted, right? If we're inverted and we're bullish, all you're doing is looking for consolidation and then a spike down at equity and then a push up, making a higher high. Throw your fibs on it, look for it to pull in the kill zone. You can pair that up with a candle if you really want to, but to keep it simple, just look for that 71, anywhere in that 71 or further. Obviously, the deeper into the fibs, you're going to get a better value on the trade, meaning you're getting a smaller stop, which means a bigger risk to reward, which means you can make more money. But the tighter you go with your entry, you're obviously raising the chances that you can potentially miss the trade. And when you have super clean setups like this, for me, it's just more important to get into the trade versus get super tight entries and risk missing that trade. Now, all you need to do at this point is open up a demo account and put this to practice and put together a strict set of rules to follow. Document everything and take lots of snapshots until you see a consistent positive trade expectancy. Make sure to like and subscribe, and I'll see you in that next video.